Hello, 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 everyone. Mike Arnold here, co-founder, Pat Trading Partners, along with Bob Iacchino. How is everyone doing? Welcome to the weekly sector overview, giving us an idea of where we should be putting our money or things to invest in. Sorry for the little disappearing act there. By the way, if you are new here, please do consider subscribing, ringing the bell, and hitting the like button. Longer term viewers, please do like and comment on the videos. So again, the point of this is to figure out what sectors are the strongest, what's in bullish mode, what's in bearish mode, and then we can dial down and find the strongest stocks in the strongest sectors. And we'll notice which ones flip from sell to buys and buys to sell. Again, this is long term. These don't change very often, but we will take note, and we will also, based off what we do in this pre-recorded session, when you tune into our live streams, we can have further discussions on various stocks and or shorter term plays in those sectors. So with that, we're going to quickly review XLE, which is the energy sector. We get a little pullback on here, but still in very, very bullish mode. I am going to be potentially watching on this next rollover play. This is the daily, by the way, for another potential move down. So do keep that in mind, and we will comment on that in the live streams. But we're getting that bounce. We're getting a nice bounce in oil. And then if it can't get above some key levels, again, if you're just watching the sector, you can always watch for right around 76.50. So if it starts getting a close above 76.50, it's in full-blown bullish mode. If it can't, I'm going to be watching for a potential rollover play and a slightly bigger pullback. Please keep that in mind. Also, there's some energy stocks that are looking a little toppy, so I am shifting to not aggressive mode in those and waiting potentially to see if they trigger some sell signals this week, and then we'll look to establish positions lower. Real estate, which never triggered a sell signal, has bounced back up. Let's just see if there's any short-term pattern on it, and it has broken above the 200. So as long as this area about 46.80 to about 47 holds, then I'll keep watching for that. If we do pull back though and start dropping back below about 46, then I am back to very cautious in real estate. You can see it is holding on to a buy signal, but it could again roll over. It's not one of my favorite areas to play right now, but it still is in bullish mode. So it gets even more bullish, though, if it can get above about 48. Above 48, you see it's into a clear path that can easily make a run back to this 62.5 level, where I will watch for another rollover. We have XLF, the financials. The financials on a weekly basis did not quite trigger a sell signal. Was watching for one to possibly trigger this week, and we've bounced back strong. Now, financials, I really have to be picky in the financial sector because banks, there's some banks I will not touch, like Citibank, with an exposure to a lot of stuff going on with Russia. But there are other strong banks, so I'd recommend doing some scans for banks, but yet being very, very picky. And again, if you find outperforming banks, they are still in a buy, and that was a strong up move this last week. So keep that in mind when you're looking at them. Now, on a daily basis, you really want to hold this 200, about 38.50 area. If it did drop down, it's getting the first cross. Where would I start getting bearish? Again, really bearish on the sector would be 37.50 area. Below 37.50 on a closing basis, we start getting much more bearish again. And long term, it is still in bullish mode. XLK, which did trigger a sell signal last week, did not trigger a buy signal again. And we have aggressive and conservative reentry rules. And aggressive reentry rules this did. On conservative, it did not. It would have to have another week up to confirm and that would be a rare whipsaw buy. Those are very, very rare. We also did see them, however, in the S&P and the Dow, which it's again starting to really remind me of, with the way stuff that I've tracked for years has gone. It's starting to remind me of 2000 when the S&P started rallying back, but I will talk about that more on the live stream. So I am not flipping this yet back to buy mode. If you're in something that is outperforming, then that's fantastic. There were some good gainers last week, like Nvidia. Uh, Amazon got a nice bounce. I don't know if you really put that in the tech sector. Where do you put that right now? Because there's so many things, but there's a lot of people who trade them like tech stocks. So Apple still holding up. Microsoft, they're still not in great positions, but that's why for anything we're looking at from the long side, we do keep tight stops because this could again roll over. Not one of the strongest sectors, but a very strong bounce last week. On the daily, we formed a triple bottom pattern coming back up against the rotation zone. Not yet back to the 200. So if it continues up, I'm watching for about 157.50 area. And then above that, 159.85. However, if it starts dropping back down below about 151, then short term, I will not be touching anything in the technology sector unless it has incredibly strong outperformance. XLI, the industrial sector, was about to do a sell signal, did not follow through, bounced back up, so still in buy mode. Still in buy mode. Let's take a look at that. So industrial sector still strong and back to the 200. What's interesting, if it can continue to run up, you have a little clear path move up here. So, and why you can say, well, that's on an ETF, but that's generally when we start seeing stuff like that, the sector can tend to strengthen. Now, where would I get back where if it starts dropping below about 99.80, below 99.80, then it's losing some of that strength, and it's not the strongest sector. It is flattening out. It just had a strong week to prevent it from going into a sell mode. But if it does turn around, that's not one of the ones I'm looking to focus on. There are stronger things. Let's see, consumer discretionary had a sell signal a couple weeks ago, strong bounce back, but no buy signal yet. This is a weekly double bottom that did trigger. So it's interesting because we have a weekly pattern that did trigger, but also it's still in weekly sell mode. So what does that mean? I'm still not very bullish on consumer discretionary, especially with the environment we are in. But if there's something on major outperformance and this does continue up, then I will see if I can find something for potential short-term plays only, because it still is in a longer-term sell signal. 188.70, 190. 323, 197.77 are to the upside. So do keep that in mind. And yes, it was a triple on the daily, but this did trigger and confirm on the weekly. So we have to go with the bigger time frame. On that daily, key overhead resistance though is about 187. So if it does follow through, you have about 186 to 187 is major overhead resistance, which is in front of that first target for the weekly pattern. Again, that's why I'm not super bullish on that sector, and it is still in conflicting one long-term sell, one shorter-term weekly buy signal. XLP, consumer staples, which was about to, again, which surprised me with that rollover, but now we have the bounce back, did not trigger a buy signal or a sell signal last week, and now clearly above us. I still like this sector. I am pickier with some of the stocks, though, where it starts getting really interesting from a bullish perspective again. If it can get above this trend line coming in this next week is coming in about 75.55. Looking at the daily, as long as it really holds above this 200 to 72.67, I will still watch for even short-term plays in this sector. So that's what I am keeping an eye on. XLV, healthcare, which we've taken some profits on healthcare stocks. We might hit another target on Bristol Myers Squibb this week. So we're keeping an eye. Also, this triggered a double bottom play. And why is that? Doesn't look like it is on the weekly because the second target's into the wick. However, on the daily, which it was also a valid double bottom and not a triple bottom, this did not get low enough. Both targets are essentially within the area. So I'm going to be tracking these targets. We are still bullish on there. So again, outperforming stocks are really strong in this sector. Where would I start getting cautious? I would start getting cautious if it got below about 130, 150 area again. And we're pretty far off. So even on a pullback, it could be pullback to watch for some more healthcare stocks on a decent pullback. And we are expecting at least a short-term pullback in the markets, but I'll talk more about that on the live streams. Material select spiders, again, still not a long-term sell signal. And now it hit this short-term sell signal, but not a weekly sell signal. And it came down essentially first and could not quite get that second target. I'm pulling that off, has not triggered the long-term sell signal and back above into a safety zone. If it starts dropping below about 83.30, then I get very cautious again on here. You can see above the trend line, above the 200, and it's going into this little clear path move right up here with a target of about 88.30 eventually. So that's another sector that, if you find outperforming stocks, is a good one. Communications, strong bounce back. Major long-term sell signals still intact. We do have a potential double bottom on a weekly time frame that has not triggered yet. So I will be keeping an eye on that even with this bounce back. I'm just watching for a lot of communication stuff to roll over. It could easily, and this is not even triggered or confirmed, but it could easily run up here and then roll over again. Not really touching anything in the communication sectors. You can see a triple bottom on the daily, but the weekly does take precedence, but neither of them have triggered yet, and they would just be for short-term bounces. So anything here would be, I'd be looking to reestablish longer term short positions or put play like bear spreads or put spreads or targeted bearish butterflies after a rollover again. So not necessarily right now because, you know, anything that's going to still run to the upside, I'd be looking for it against key resistance and then look to establish bearish positions. XLU weekly, still in buy mode. No sell mode yet. Not much else going on here. It is in strong performance mode. I will be keeping an eye, though, on this. Now, this is slightly lower probabilities because it is against the daily rotation zone. No, but actually by the time it triggers, it will be out of the way of the daily rotation zone. So if it gets below 69.62, it does have a short-term sell signal back to the target of the 200. If we went back to the target of the 200, it would still looks like it'd still be in long-term buy mode. So utilities could theoretically roll over, remain in long-term buy mode, but be short-term bearish mode. So I'm not getting in anything utility-wise at this point. I will watch to see if this triggers and then watch for pullback plays in utilities. XRT transportation, or retail. Sorry, I was thinking IYT. XRT retail, pretty decent bounce back. Still in sell mode though. So could this continue to rally and remain in sell mode? Yes. I am not bullish on the consumer at this point and retail. It's coming up against that 50. If it does run above there, then the next major area I'm watching is about 83, but that's to this prior major resistance shelf. So this is something, again, if it continues to run up, I will watch for another bearish rollover play. IYT, now we're getting to transportation. Why we look at it in here is we don't look at it in anywhere else. Never triggered a sell signal back to a solid, still in solid buy mode. We're coming up against some resistance. By the way, this is an example of not a double top. This is an example of two tops, why it's not reversing a big enough move, just in case anybody is wondering about that. As long as it remains above about 259, I am in bullish mode, but I will get cautious below 261 if it dropped below here. Now, I'll get stronger in anything transportation related if it can get above 270.50. And then let's get to our final couple, commodities, which we're very bullish in. I now have to update this with, we got another pausing bar. You see hit the key harmonic and has pulled back substantially. Again, we're long-term very bullish in this. Long term, I can't reiterate enough. But short term, we were watching for that pullback, especially we triggered that completed sell pattern in oil, which is now done. So what does that mean? Again, we could still have another rollover play, and oil is pretty big in the commodity index. Grains softened, but we're longer term very bullish on grains. Gold and silver have pulled back a bit. So again, I'm watching for a potential rollover play in DBC again. What would take me to get in full-blown bull mode? Full-blown bull mode would have to be above 20, roughly 27. So even if we do rally up a little more, we could then roll over, and I will watch for that bigger pullback. If we drop down below about 24.30, then the pullback's in progress. I'll be watching for potential DBC support around 23.75. And then if we drop below 23.75, I would be watching for a pullback to roughly about major support coming in about 23. 22.75 to 23. Don't want it to drop below that long term. DBA, see, also pulling back slightly, but still an incredibly strong buy mode. We have this little mini double top, which I'm going to be watching for potential more downside pressure on the agriculture. This is the DB Agriculture Fund, and then we'll be shifting back to full-blown bull mode on that. So right now, we are still in a slight bearish mode, watching for a potential bigger pullback before shifting back to bull mode. Just remember, long term, we are in bull mode. So how do we address that? We then watch for these pullback levels to get hit. We watch for plays in the agriculture fund related to commodities in the agriculture space, and we watch for those to pull back to either support levels or rotation zones or issue buy signals, and then to reestablish positions. That's what we have for you in the sector overview. Again, if you're new here, please do consider subscribing, ringing that bell, and hitting the like button. Longer term viewers, leave some comments on what you think about this segment, and please do, if you did enjoy it, hit that like button. Again, please tune into our daily live streams. We do have multiple of them. And in the afternoons on Tuesdays and Thursdays, Bob Iacchino joins us to give his viewpoint and outlook on various things going on with the markets, commodities, stocks, and anything else that crosses his mind. And especially what's going on with the Federal Reserve. There's some speeches coming up this week, so please consider tuning in, and I'll talk to everyone later. Bye for now.